what does the government start bailing out when things start going bust? Will it be the local and regional banks only? Or will it be the bigger banks? Or will it be some category of hedge funds? And we can't know that. So if the government were to step in and prop up the housing market, which they kind of did last time around, during the Great Recession, they basically nationalized Fannie and Freddie and it took over the housing market in that way. And they could conceivably do that again. But if they do that, then you look at, okay, how much does it cost them to do that? And we're going to add that to the deficit. And what does that do to the dollar?
Welcome to Collapse Life. I'm your host, Sarah Sefton, and I'm very happy to be back with you after a few weeks' break. While we were away, the price of gold and silver hit historic highs, a move that feels like more than a market story. Could this be the end of the fiat currency era? There's no better person to help us make sense of the financial mayhem and how it connects to the political and the social shifts we're living through than today's guest, John Rubino, former Wall Street analyst and the author of Rubino.substack.com. Hello, John. It is so good to have you back with us. And I can't think of a more important time than this for your insights.
I'm sorry. Yeah, we are doing this at an interesting time, aren't we?
Indeed. Indeed. In fact, the last time you were with us was almost exactly 2 years ago, if you can believe it. And we talked then about the coming currency crisis. That's what we called the episode. It now feels like it's no longer coming, it feels like it's already arrived. So, this is an incredible time for us to be talking. And I wanted to start right there by just kind of asking you, we've got the record gold highs, record silver, central banks hoarding, governments de-dollarizing. Do you think that this is the moment that the curtain finally falls on fiat, or are we still in the opening act of something even bigger, something even more chaotic?
Well, I think we'll look back on this, assuming that we avoid, nuclear war and things that can put finance on the back burner. Assuming finance is kind of a dominant factor in the coming decade, I think historians are going to look back on these days, currently, as the beginning of the death spiral for fiat currencies. In other words, the point at which the experiment began to really seriously fail
Mhm.
because most big governments now are at the point where their debt is immense, their deficits are high and uncontrollable, and the interest cost on the debt that they're building up is starting to go parabolic, which adds to deficits in the future, which adds to interest
Right.
expense in the future, and there's nothing they can do to stop it. Really, because if they try to cut spending, well, watch what's happening in France right now for what happens if they try to
Mhm.
cut spending, because you instantly have millions of people in the streets if you try to cut government programs, and then you, as the government official trying to make those cuts, get thrown out of office. So we're at the point where we can't stop spending. Governments cannot do that. And we also can't manage the financial consequences of our continuing to run massive deficits and generate massive interest expense on those deficits. So yeah, it's basically the point at which we begin to realize where there's no fix for what's
Mhm.
happening. And you're seeing that in the financial markets now, where the biggest trade is the debasement trade now, where people are moving capital out of financial assets and into real assets like gold and silver and farmland, et cetera, et cetera. And that is one of the signposts on the way to the end of the fiat currency system. And I think you can make the case that we're basically there now. We're at the beginning of the end process for the fiat
Yeah.
currencies, and in the coming decade, they will basically go away one way or another.
Yeah. And this is something that you have been talking about for a very long time. So the fact that we've arrived at this position maybe is no surprise. But is there anything in the way things have played out that has surprised you, either on the timeline or the triggers, anything that looks different from what you expected?
Well, it took way longer than it should have. The numbers were already unmanageable when the dot-com bubble blew up in the late 1990s, early 2000s. So it feels like the system has been on borrowed time ever since, no pun intended. Um, and that was a very interesting question. Why isn't the global financial system blowing up with all the debt that we have here in 2008 or whatever? And I think the answer is the reason that we were able to keep this thing going for so much longer than seemed reasonable just based on the numbers is that this is the first time in human history where all the big countries have monetary printing presses. In other words, they weren't on
Mm.
gold standards where if they wanted to do something, they had to literally go get gold with which to do it. They could just print the money out of thin air, and that allowed the big financially powerful countries of the world to continue to borrow more and more money because they were able just to print the currency necessary to cover their mounting debts. And that bought us an extra either 10 or 20 years, depending on where you want to, start the should have declined part of the story from. And, in order to buy that extra time, we had to take on just insane amounts of extra debt, which makes the
Right.
crisis that much more serious when it finally hits. So yeah, the timing surprised me a lot because I just thought this was, as uh, an aside here, James Turk and I co-wrote a book called The Coming Collapse of the Dollar in 2004.
Hmm.
Biggest fear while we were writing that book was that the system would collapse before we went to press. We thought maybe we wouldn't be able to get the thing out in time to be timely with the system blowing up. Instead, 20 more years passed before the
Right.
global fiat currency system really started to break down. Um, Otherwise, this feels like it feels familiar based on what we've been talking about all these years. Interest rates have started to
Right.
go up because people don't trust the big currencies anymore, and they want to be really well compensated if they lend money for long periods of time in those currencies. And precious metals are just going through the roof right now because, again, nobody trusts the fiat currencies, so they're buying the kinds of historically stable money that we tend to go back into when we're afraid for what's happening with government-controlled currencies. So that all feels very familiar. Um,
For sure.
and yeah, there's a lot of geopolitical stuff going on that I think nobody could have predicted. But in terms of just
Yeah.
finance, yeah, this feels like it 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 should feel given where we are in the process.
Yeah. And you've already kind of explained that there's no way of backing out of this at this point. Um, the story's already been written and it's just taken this long to get there. So the question that runs through my mind is, do you think the people who are running the show actually understand the scale of what's happening if we're at the tipping point and kind of going to start going down the downslide? Do you think they really understand that, or are they just deluding themselves, thinking that there's more money printing, more policy tweaks, more interest rate adjustments that can kind of continue to push this a little bit further?
Well, that's a question that pops up frequently now, which is, are these guys complete morons or are they evil geniuses? And in other words, are we just blundering off a cliff, or is this part of a very complex plan to financially impoverish the whole world and make the
Right.
99% basically debt slaves, run by an aristocracy comprising the 1%? And I don't know which of those is the answer, and I don't know which is scarier, because either way, you get just an absolutely terrifying world 10 years hence. But I think it is possible that the guys in charge don't completely understand what they're doing because most of them are operating with a Keynesian model, a framework from
Mhm.
Keynesian economics, which says that debt does not matter. The only thing that matters is something called aggregate demand, which is what we buy in a given year. And as long as aggregate demand is growing by about 3% a year, you have a healthy economy. So whatever you have to do, however much money you have to borrow in order to get 3% growth in aggregate demand, it's worth it because that the
Mhm.
goal is the aggregate demand, not any kind of target debt level or anything. And a lot of these economists now are 50, 60 years old. They've spent their entire careers within that model. And it's possible that they've just never looked beyond that model. And they're looking for fixes within the Keynesian model which would be more government control and expanded regulation, things like that, and more money printing. So they're thinking
Right.
maybe they can fix this with easier money. And that sounds crazy to you and me, right?
Yeah.
But it could be that that's how they're looking at the world. And then the other
Yeah.
side of it, with the plan to make us debt slaves to the aristocracy, that's a little bit easier to understand from the point of view of the aristocracy. They might well know what they're doing, and so much of what goes on right now is a piece or pieces of this bigger puzzle. And the pandemic, stuff like that, or a lot of geopolitics out there, the Ukraine war. You can fit those things into the scenario of the rich destabilizing the world and then using the destabilized world as an excuse for martial law and then just taking over. Artificial
Yeah.
intelligence fits into that too. So, yeah, either way, we're in very deep financial trouble. But the outcome would be very different other than that. Between those two scenarios.
Do you think that this leads us to something like a coordinated central bank digital framework?
Oh yeah, the CBDCs, central bank digital currencies, are either way part of the plan. You could,
Mhm.
if you're the economists that are just blundering off a cliff, then central bank digital currencies just look like a great idea because it gives the government more control over people, and that
Right.
makes it easier for a government that's going into deeper and deeper debt to control that process. And
Right.
the other scenario, it makes it much easier for an aristocracy to control everybody else because they're seeing what we do in real time with our financial accounts, and they can create the equivalent of a social credit score and
Mhm.
use that to control us. So that the amount of
Yeah.
information that comes from a central bank digital currency is a very important tool for control going forward. Either way.
Yeah. Absolutely. It's very chilling, but as you said, either any of the outcomes just look pretty ugly if we're not part of that aristocracy, that 1%. So the next thing that we can talk about a little is just kind of what is this going to look like and feel like for the everyman. And um, but before we get there, I think the really important topic of the week is precious metals, which is something that you are very expert at. So the prices hit record highs. That's clearly a signal that confidence in paper money is cracking. So, talk a little bit about where we are and where you think the story goes from here.
Yeah, precious metals were supposed to go up all along, but we had a 10-year period in which they just stagnated. And the gold and silver miners, which are part of the precious metals story, as capital building tools. In other words, they are things you want to invest in because they can go up some multiple of what gold and silver go up. You can make a lot of money that way. And they had a bear market that just ground
Mm,
on forever. There were a couple of years there where they were about the worst performing sector in the whole financial market.
yeah.
And that finally has started to change. Gold and silver, well, gold just took off finally after
Yeah.
bouncing off of $2,000 an ounce for 2 straight years. It broke through and then just never looked back. And now it's what, 3,400 and change right now, right? Um, and silver is starting to catch up and overtake gold in terms of percentage increases, and the miners are just rocking. So
Mm,
that's what happens during an inflationary period when currencies are losing value dramatically and people don't trust them anymore. You get this kind of capital flow into precious metals for safety, and then that turbocharges the miners. So this is very familiar. This is a lot like 1979 and 2007 and 2008. You got the same kind of capital flows. Same thing is happening to precious metals prices, and the miners are doing great and everything. But this time might be very different
mm.
going forward because we might be towards the end of the experiment now, and if fiat currencies are actually going to die, then by die I mean fall to their intrinsic value of zero in some cases,
Right.
then what does that mean for the price of gold? Because if the dollar were to go to zero, I'm not predicting the dollar goes to zero, but some fiat currencies will, and a lot of
Mhm.
people are going to start worrying about that happening to even the big fiat currencies. And so if the dollar goes to zero, gold goes to infinity when priced in dollars. So how do you trade something like that? And that's the intellectual challenge right now. We've got gold bugs, stackers, people who have been investing in precious metals are having a really good year, but they're
Mhm.
building up profits that they want to protect. And so the question is, at what price of gold do you want to start taking profits, and
Mhm.
where in the upward sloping arc of Newmont or Agnico Eagle or the other big miners, at what point do you start selling some of those shares? And that's a really tough challenge right now, because
Yeah.
it could be that we have much, much further to run with these things. There are a lot of people now who are running the numbers and saying, okay, we need $10,000 to $20,000 an ounce gold in order to make a new gold standard feasible. And see, that's one of the least painful ways of getting from here to there, and getting from the current collapsing financial system to one that works going forward, is you just go back to the gold standard. Just announce on Sunday night that on Monday morning, the dollar is now just a name for 1/20th of an ounce or 20,000th of an ounce of gold. And,
Mm.
you know, um, but what does that mean if you're investing? Because yeah, it's not really clear what number they would pick for gold. And if you don't know that number, you don't know where the top is for the precious metals miners or for silver or anything. In this scenario, if silver outperforms gold, which it usually does during a precious metals bull market, we're talking triple digit silver. And that's a huge run from where it was a year or two ago. So yeah,
Mhm.
it's the kind of problem you want to have. You're so right that you can't figure out where the top is for the things you own, but you also don't want to get out one third of the way up, and so
Right.
this is
And then you not be
fascinating.
able to get back.
Yeah, well, yeah, if you
It's frightening, it's fascinating, it's also frightening. I just wanted to quickly clarify, I think you had said gold was 3,400, it's more like 4,300,
oh, I'm
at
sorry.
this.
Yeah, that's right.
Yeah, that's
Yeah.
okay.
Thanks.
It's still it's crazy where it's at. I want to pause for 1 second, just for those of our viewers who don't quite understand this, or maybe who haven't been following it as closely. I think you're the perfect person to explain that. Um, while this is kind of an exciting moment to hear this news, if you have been stacking or if you are a gold bug, it's not that the value of gold is going up, it's the value of the dollar is going down. Can you just unpack that really quickly for those who haven't quite internalized the idea?
Yeah, gold is a rock. It doesn't actually do anything. It's just this inert
Yeah.
piece of metal that we use as a measurement tool and a store of value. And when it's priced, when you see, $4,300 per ounce for gold, um, Mhm. that is a measure not of what gold is doing, but what the unit of measurement that we're using to price it is doing. So when gold goes up, that means the value of the dollar and the euro and the yen and all the other big currencies is going down. So what's happening lately
Mm,
is that the value of the dollar is falling dramatically. And we're seeing that in the price of gold, because the dollar number we assign to gold is going up. But it's not because gold is doing anything. It's because the dollar is doing something very bad.
right.
It's
Yeah.
falling in value at an accelerating rate.
So, with that in mind, as you were talking about those people who have been investing, maybe in miners or things like that, and wondering when to kind of cash out, if you do cash out, you end up with a whole bunch of dollars. But is that where you want to be as an investor now, to have cash in hand?
I get that question a lot in comments on Substack. So people say that, well, if you're going to sell your gold for dollars, and dollars are going to be worthless. What was the point of selling the gold in the first place, or selling anything else? And
Yeah.
yes, if you're going to take profits from precious metals right now, because we have a long, long period of dollar debasement ahead of us. But if you're a little nervous and you're thinking about taking profits, you would have to shift the proceeds from the sale of, say, a mining stock into something else. And so that's part of the intellectual challenge, because what else is there that's better to own than precious metals in a period of rising inflation, that is dollar and yen and euro debasement? And there isn't any one right answer. We are only going to know the correct answer with hindsight, when we look back and go, oh yeah, I should have mortgaged my house that year and put it all
Mhm.
in this other thing. And So that makes it a challenge. It's, like I said, it's the kind of the kind of problem all investors want to have, but it still is an issue, you know. And I'm personally, I took a little bit of profit out of some of the gold and silver miners that have had nice runs, but mostly I'm still totally all in precious metals, because
Right.
I think this is a trend with legs, because none of the big governments of the world are actually doing anything to fix their financial problems. They're all just blundering in the same direction.
Right.
And that means that the thesis that applied to gold back when it was $2,000 an ounce still applies, because gold is just a reflection of what's happening in the world. And if the same
Right.
stuff is happening in the world, then you still want to own precious metals. Um, Fascinating times, and the people who've been stacking and buying gold and silver miners and gold and silver itself, um, missed out on Bitcoin to an extent, missed out
Mm.
on the AI stocks. And so it's really nice to be in the best performing asset after 10 years of being on the sidelines, watching other people make a lot of easy money. So,
Yeah.
yeah, there's that.
With all that money sloshing around wherever it's coming from, and now savvy investors sort of realizing I've got to do something with this money. Do you see the potential for something like a crack up boom where people run for the exits and start buying up assets wherever they can?
Yeah, I think, speaking strictly of special or precious metals for a minute, yeah, there's usually a parabolic run right at the end of a cycle when there's a bull market. The last year, gold and silver spent it going straight up, and we're halfway there in terms of the arc of the price increase right now. But I think that the panic phase of the process hasn't really started yet. And I think that'll
Okay.
come. There'll be some kind of a financial crisis. Like, here's one that's pretty topical that could do it. For instance, the local and regional banks right now
Mhm.
have a lot of embedded losses, because a lot of the bonds they hold have gone down in value when interest rates went up, and then they own a lot of commercial real estate, and a lot of that is going bust. And they just had a couple of auto-related financing entities go bust. And so, say something like that happens on a slightly bigger scale, and then everybody gets spooked about their local and regional bank, and they pull their deposits out, which causes runs on those banks, which basically causes the whole
Mhm.
sector to collapse and forces the federal government to step in and bail everybody out. Okay. And that spooks people who are looking at the currency, because, oh, here's another $3 trillion the federal government just made out of thin air,
Yeah.
and the dollar starts to fall dramatically. Well, that would be a panic moment for precious metals buyers, because if you don't have all the gold and silver you want, and something like that starts, then maybe you just buy it for whatever you have to pay for it. And a
Right.
lot of people in the generalist investor sector, which holds way more money than exists in precious metals right now, people start finally just giving up and saying, screw it, let me just get some silver right now, I don't care what I have to pay. That's when you get the
Right.
panic buying, and that has not happened yet. But we're seeing signs that it could be starting, and in that case, that's where you get your triple digit silver scenario, where it goes to $150 an ounce or something, and it's
Let's
totally
let's
possible.
talk about silver. Yeah. You think that's possible. So you've really recently written that silver is turning into unobtainium. So help people understand that and what's actually happening in terms of physical supply. Because silver is different than gold in the sense that it has an industrial use and it also has the monetary demand. So talk a little bit about the silver play.
Yeah, silver is it's unique in a way because it's all a monetary metal. We've used it for money for 3,000 years, and it's got a relationship with gold where it tends to trade in relation to gold's price. And it's also an industrial metal that's used in a lot of things. Solar panels use gold and or silver, and electric cars and missiles. A lot of military hardware use silver, and that's harder to quantify, but it sounds like a very big number. And we, the mines of the world are not producing enough silver to cover all that demand. So we're eating into the above ground stocks that are in the inventories of, say, the COMEX Metals Exchange and other places like that. And it, it could be that we're starting to run out. And when that happens, for instance, if you've got a long futures contract for silver and you show up and want to take delivery, in other words, you say, okay, here's my futures contract. I want that many ounces of silver. And the exchange says, no, I'm sorry, we are just going to give you cash because we don't have enough silver to cover that. Then all of a sudden, everybody realizes that we're running out of it. And the entities that need it, in other words, if you're making electric cars and you need silver, um, to be able to produce your electric cars, you basically are going to pay whatever it takes. So you're going to get next year's silver at whatever price you have to pay, and that will just spice the price or spike the price.
Right.
And that's also very possible right now because you're hearing a lot of rumblings about different makers of different silver kinds of products just running out of inventory. Silver mints who don't have the coins that they usually have on offer, things like that, and that's where it starts. If a lot of people are just out of silver and you can't buy any, that's where the unobtainium idea comes in. And if you can't get it, um, then whether you need it or not doesn't matter because it's just not there anymore. And you never want yourself to be put in that kind of a situation if you're building something that involves silver. So at that point, the price goes to numbers that sound crazy in today's world, but that might be conceivable if you're General Dynamics and you've got an order for missiles from the government and you need X amount of silver. Well, you just pay whatever you have to pay and then you bill it to taxpayers. So in that kind of a world, um, I don't want to throw out crazy numbers for silver specifically, but you could conceivably get numbers that would be life changing for somebody that's stacking and just holds on through most of that.
Right. Given what you just said, it's strategically important and it's high demand and low supply. It begs the question, is there the possibility of a kind of a redux of the FDR days? Could silver or gold be confiscated because of the strategic importance of the metals?
Well, gold, yeah. I mean, if we decide that gold is money again, then it's conceivable that the government just does what FDR did and makes it illegal for private individuals to own gold. Silver is much tougher idea because it's an industrial metal, and are you going to tell General Dynamics they can't have silver, or are you going to regulate it in some way? That would be really tricky, and I think that's a lot less likely. So if you're worried about
Mm.
confiscation, silver is a safer play from that point of view than gold. And what that did in the 1930s was it created a lot of criminals, people who just didn't turn their gold in. And
Right.
so, we're presented with some intellectual challenges when we're deciding whether to invest in gold and silver or not, and at what price, et cetera. But it's possible that we have some moral challenges going forward too, where we have to decide whether to comply with some government regulation involving our gold and silver, or just ignore it because nobody knows what we got out in the backyard or in a bank safe deposit box or whatever.
Yeah.
So yeah, I don't have an easy answer for that, but it is something we should probably consider just so we know what our answer is going to be when the time comes.
Hmm. Yeah, for sure.
Yeah.
And bank deposit boxes are probably not the place where you want to be keeping your precious metals.
Well, with gold
Um,
back in the 30s, they would have a some kind of law enforcement officer with you if you were going to access your safe deposit box. So yeah, that was not the place to hide your gold back then.
Yeah, and I'm sure nothing's changed much, especially with, as you already indicated, banks not being in a particularly strong position these days. And of course, they're just going to drill out the safe deposit box and take what they can if they're going down on the way out.
I've been
Um,
thinking about that because I have a couple bank safe deposit boxes, and I'm wondering if they've run their course, and that's
hmm,
not a place to keep things anymore.
yeah, yeah. Let's talk a little bit about, what this is going to look like or feel like for just ordinary people who are going through, making the best life that they can for themselves and their families. Are we going to see kind of a slow erosion of purchasing power, or is there going to be a sort of sudden cliff overnight evaporation, like some big kind of black swan event? What do you think? Obviously, you don't know, but what do you think? What does it feel like?
Oh, I think the old Hemingway quote, where somebody went bankrupt and was asked how it happened, and he said, "Well, slowly at first, and then all at once." And the most likely scenario is something like that, where we kind of drift in this direction for a while, and then something happens to cause everybody to panic. And then you get runs on banks and currency collapses and metals exchange defaults and things like that. You get them in bunches instead of one thing at a time in sequence. And eh, historically, that's kind of how it went. Like the Weimar Germany hyperinflation just lasted like 3 years. They went from having a reasonably strong, effective currency to pouring bills into a furnace to heat a house and things like that. So that's conceivable, that if you're not ready by a certain time, you lose the chance to be ready for whatever's coming. And there is no guaranteed scenario, of course, with any of this, but there's just historical examples and probabilities. And one way crises frequently do happen is that the things that are going to cause it to go just build up slowly. The example sometimes people use is a snowy mountainside, and the snow falls and everything's fine, but then one final snowflake hits, and that breaks the puts a crack in the snow and causes an avalanche. And you can't know
Yeah.
which snowflake will fall or when it will fall or anything. You just know that you've created the conditions for something like that. And history and physics say that eventually the avalanche will happen. So,
Right.
the investment advice that flows from that is to get ready, be a little early if you have to be, so that you're not late, because being late is impossible.
It's deadly. I mean, so one of the things that's kind of challenging is that um, all the typical indicators that would show us when something might start to happen are just artificially blown out at this point. So it's getting very hard to kind of tell what might come next. And like you said earlier, you have been talking about this and writing about this for decades now. And so for some people, there's kind of an element of crash fatigue, like you've been talking about this for a long time, hasn't happened yet. I don't want to hear about it anymore. So, one of the questions I have is kind of what are the indicators that tell you that it's different this time? And obviously, you can't predict timing. Like you said, it's just going to be that one last snowflake. But how close to are we in the slowly or the all at once phase, or how close to that moment do you think we might be?
Yeah, that I don't know, and I have no credibility when it comes to timing of things like this because, like
Yeah.
I said, back in 2004, I thought the system was ready to break. But I think we're a lot closer to that point now for sure than we were back then because government finances around the world are so precarious because we kept interest rates at artificially low levels to buy us the extra 10 years after the Great Recession,
Right.
but at a cost of a massive increase in debt. So now we let interest rates go back to normal levels, and the interest cost on our debts is becoming debilitating, which means we can never cut interest rates again because we just can't play that game anymore. Interest rates have stopped being a tool that we can use. And once you lose that kind of a tool, it's not clear what's left. It's possible that the next time the central banks of the world have to intervene in a crisis, the bond market and most other markets just won't listen to them or will do the exact opposite of what they want. And then at that point, it's over. And so we can't know when that point is going to be because we don't know when the Fed is going to start really aggressively easing again. Like if we tip into a recession in 2026 and we have an equities bear market, that might do it right there. If the Fed thinks it needs to aggressively ease to keep stocks from tanking, and the bond market doesn't listen. In other words, bond yields go up when the Fed is trying to force them down, then that's it, game over. And so it could happen as soon as then, when the next time there's an equities bear market, that could be the end of the fiat currency experiment. And it could happen in
Mhm.
2026 really early, easily. So, but, having, um, having already admitted to have no ability to predict dates and times and things like that. That isn't something we should be banking on. We should just be steadily preparing for some kind of a financial crisis that leads to a loss of faith in the currency. And the
Yeah.
timing, in a way, if it goes on longer, the timing is actually better because that allows you to get all your positions in order and have exactly what you want instead of having to, rush or only being two-thirds fully invested in whatever it is you're trying to invest in. So
Yeah.
this stretching out is helpful if you're not completely where you want to be.
Yeah. If you already know kind of where you are and where you want to be, then you bought yourself a little bit of time. It also, though, adds this level of anxiety because you're kind of waiting for something to happen and thinking that it will happen. And again, like I said, kind of looking for the indicators that might show you something is about to happen. But it's increasingly feeling like the things that used to tell us are not the right signals anymore. I mean, for example, as you know, because we were talking offline, we just bought a new property. We've been in the real estate market for a year, and what we're seeing is completely um, discombobulating. I mean, the actual real life story and what we're being told about the economy just seem like two totally different things. It's something that you talk about and write about often, and you talk about how the economy is sort of synthetic and it's propped up by credit and stimulus and a lot of narrative management. So I guess what I wanted to ask you is how much longer do you think and again, not it's not about timing, but it's just about kind of what are we seeing as responses um, in terms of just delaying this reckoning? What happens when governments and central banks can just no longer control the narrative?
Well, that's the big question, isn't it? Because we've never been in this situation where the whole world was blundering into a gigantic currency crisis. There have been
Right.
plenty of currencies evaporating over the past few hundred years, or actually a couple of thousand years. And it's almost always one country screwing up in the context of a sound money world. Everybody else is on the gold standard, and that country that screws up has a very hard time for a while. But for everybody else, life goes on as normal. And this
Mhm.
time, it's everybody all at once, and that makes it a very different story, or actually the same in some ways, because the trajectory of a currency that's being debased and inflated away is going to be the same regardless, but it's just going to be everywhere, and there won't be geographic places to hide out. So
Mhm,
um,
mhm.
that makes it different and fascinating from a economics nerd standpoint, but really hard to predict from an analytical standpoint. But for signals that we should be looking at, we're already seeing a lot of them right now. Real estate, for instance, we had this huge housing bubble where prices went up to levels that, in some sectors or some markets, twice as high as during the bubble of 2006, 2007. So houses are wildly unaffordable right now. And
Mhm.
yet there they are sitting at those prices. And that's why no deals are getting done. There are very few pieces of real
Exactly.
estate that are changing hands right now. So it's kind of a frozen market. To unfreeze it, what has to happen is some sector of homeowners have to start selling, and they
Mhm.
have to then panic because they're not able to sell, and they're going to have to take whatever they can get, and then that sends prices
Right.
just kind of cascading down. And you got at least three big chunks of the population who are candidates for this. One is the Airbnb guys, who bought
Mhm.
these little mini real estate empires in the past 20 years with really cheap money, and now the cash flow that they're generating isn't nearly adequate in a lot of cases to cover the cost of interest on the debt. And so they're going to be forced to dump a lot of their condos and houses going forward. No way around that. And then there's boomers. My generation is getting older all the time, and our McMansions are harder and harder to handle. If you've got a 3-story house on 5 acres of land and you've got an arthritic hip, all of a sudden life is not as much fun as it used to be. So you're going to sell that big house, or you're going to
Yeah.
invite 3 more generations of your family to move in with you and take care of you, in which case they have to sell their houses, or they have to not rent, which hurts the rental market, or whatever. And then the last group, and the poetic justice story part of this here, is all the private equity companies that have become America's landlords by buying up entire neighborhoods with 0% financing and turning them into really expensive rentals. Well, those
Yeah.
rentals aren't working out either. So, and then the price of those houses, should they have to be sold, are going to fall dramatically, or already falling.
Mhm.
So you're going to see a lot of inventory come online from private equity, and a lot of these big Wall Street and smaller Wall Street entities going bust because of all the real
Right.
estate they bought at crazy prices, which will be fun to watch, but it'll send the average price of a house way down if that happens. So
Mhm.
I think you could see
Mhm.
a 50% decrease in home prices in a lot of the really hot markets over the next couple of years.
Yeah. And we would have thought that we'd start to see that system cracking already, because it is a house of cards, as you just described, no pun intended. But it still seems to be holding. So the prices, there isn't much inventory. The prices of the sellers are still staying unrealistically high. We were seeing weird things, like a house that was priced around 200, or a building. It was priced around 200,000, wasn't selling, came off the market, came back on the market and more than double the price. So it's just, none of it makes any sense. One thing about the private equity, which is just an insidious piece, especially when it comes to real estate, do you think that that system really will crumble, or do you think it will be classified as too big to fail?
Well, we'll see, because that's a really interesting part of the tail end of this story. Is what does the government start bailing out when things start going
Mm.
bust? Will it be the local and regional banks only, or will it be the bigger banks, or will it be some category of hedge funds? And we can't know that. So if the government were to step in and prop up the housing market, which they kind of did last time around, during the Great Recession, they basically nationalized Fannie and Freddie, and it took over the
Mhm.
housing market in that way. And they could conceivably do that again. But if they do that, then you look at, okay, how much does it cost them to do that? And we're going to add that to the deficit. And what does that do to the dollar? So, um, should they try to bail out, for instance, the private equity landlords, then that might cause the pressure just to shift over to the dollar. And then we get inflation. And then that breaks the system. So there are a lot of different ways this could happen. And it wouldn't
Mhm.
at all be a surprise if there's a crisis, then a government bailout. And that government bailout is the thing that catalyzes the next big currency crisis. And so it's just a question of what blows up first. What is the catalyst for the next crisis? Will it be the the bursting of the AI bubble, which is totally possible now because nobody's making that much money out of AI now. They're pouring hundreds of billions of dollars into it
Yeah.
and making maybe tens of billions of dollars out of it so far. So let those stocks tank, and that pulls the rest of the stock market down with it. Will the government step in and buy stocks? Yeah, maybe. That's what the Japanese
Mhm.
government did last time around. But we will be doing it with massively more debt than we did the bailouts last time around. And it could be that
Yeah.
that's what breaks the back of the system. And we can't know, but there's so many different things that could happen that it's hard to believe that at least one of them won't happen.
Yeah, absolutely. Well, as we said in the beginning, interesting times for sure. And John, you provide an incredible amount of information, not only about the analysis, but also just how people can prepare, really practical information. So remind people how they can find you and support your work.
Yeah, I'm at rubino.substack.com, and I publish a newsletter there that basically looks for actionable advice for all the crazy stuff we've been talking about so far. And it turns out there's an awful lot you can do, and a lot of it is kind of in the category of prepping. Prepping and survivalism and things like that, which we used to kind of make fun of. That used to be the province of cranks, and now it's kind of the
Mhm.
preferred lifestyle for to be prepared for what's coming. In other words, if
Yeah.
you can have a little piece of land that grows some food, then if the food supply chain is messed up for whatever reason, then you can basically cover a lot of your nutritional needs. If you have physical precious metals, then it doesn't really matter what happens to the fiat currencies of the world because you have money that you can use to get what you need.
Yeah.
If if it gets harder and harder to get anybody to come out and fix things, if you have the skills to be able to do a lot of handyman kinds of things yourself, then you're in much better shape than the typical corporate lawyer who can't fix anything. But uh, so these are all things that we should be exploring in our own lives, not just the investment
Yeah.
side, but the lifestyle side. If we want to be prepared for a really strange, chaotic half decade to decade, which is probably what's coming.
Yeah, absolutely. Well, um, I'm sure that many of our viewers are already subscribed, but if they don't, I encourage everybody to go and check out John's work. It's really incredible. And John, thank you so much for coming back on to Collapse Life. It's always a pleasure having you and your perspective on where we're headed.
That's Sarah. This was fun.
It was wonderful. Thank you so much. And to everyone who is watching and listening, thank you for spending your time with us. If you'd like to do a deeper dive into our work, please visit us at collapselife.com. You'll find all our interviews, our articles, and our weekly breakdowns there. And if you want to help us keep doing this kind of independent work, please consider becoming a paid subscriber on Substack or supporting us through our Buy Me a Coffee page. Every bit truly helps keep us ad free, and it helps us to keep bringing you important conversations like this one. We'll be back next week, and we hope to see you then. Until then, just remember, keep your chin up. It's only collapse. See you soon.